Marlon, thank you so much for coming on to Startup Steroid today. I'm really excited to share your story and the work you're doing with Nex Cubed. We're gonna get into a lot of details from the founder perspective, from investor perspective. We're gonna share all of those details today. But before we get into all of that, introduce yourself. Tell us a little bit about your background.
Sure, yeah, and thanks for having me. So I'm originally an East Coaster. Grew up in Maryland, but came out to go to school at Stanford. Fell in love with the Bay Area, and never left. And since I've been out of here, had some time working at big corporate like HP and their social innovation work. And then also after leaving HP, went to work at a company called GSV Labs, which is now called One Valley. But when I was there, the focus was really on working with startups and corporations, helping them along their innovation journey from early days, just getting started, to Fortune 500 companies. Had a lot of fun working at GSV, but now I'm at Nex Cubed. Been here for a little over 3 years now, and really enjoying our work here. We're investing in early stage startups and helping them grow and scale their businesses.
Awesome. So with GSV, what was sort of the role you were playing? What was the day to day like?
Yeah, so I was the CEO there, so I was doing a lot of nothing, maybe. But, no, it was early days, similar to when I started at NextCube. The company had been around just about a year or so when I joined. So it was really about getting the operation up and running. We had a facility in Redwood City, and um, it was a kind of a WeWork plus play where we were selling space, but then offering premium acceleration services to our
Right.
to our clients. And so I realized that I wasn't a real estate guy, and after we had opened up operations in Boston and closed out our Series B, I was ready for a new challenge.
Fantastic. So you joined NextCube, and now with NextCube, I think it was similar story, right? It was around for a few years. I know we had operations in Southern California. What was sort of the initial role that you sort of envisioned and you took on?
Yeah, the neat thing about it is they were looking for a CEO and had really built a great foundation on how they viewed startup acceleration, which really resonated with me in the sense that everything that we were doing was with this concept of putting the entrepreneur first. And so if we were going through an acceleration program, and as we all know, there are thousands of them out there, what would we want to, get out of it, and what would the process, look like? So we, you know, uh, jumping into it and seeing that they had made the program virtual, in the sense that you didn't need to move. This is pre-COVID. So we were virtual before it was cool to be virtual. But they didn't require founders to, uproot their families and move. We had offices in both San Diego and San Francisco, so you could participate remotely. It wasn't a one size fits all curriculum. It was fully customized to meet the needs of the startups. Because when in my work with companies, you just hear a lot of feedback around, yeah, I went through this program. Uh, 10% of what I was getting from it was hyper relevant, and so it was worth that I went through it. But 90% of it wasn't, and so we try to flip that on its head and say, okay, let's just create a structure where everything that we're providing to the entrepreneur is getting them one step closer to where they want to be. And then the last kind of really neat component of it was it. Many accelerators are mentor volunteer driven. So the groups that are really providing a lot of the value, they may, decide to go to Cabo, or they may not have the same amount of time that you would want to be able to spend with the companies, or they're really just kind of meeting once a month and checking in for lunch.
Right.
Like our program, we have advisors who we pay to hit the KPIs that the companies are looking to us to realize. And so through the course of our 4-month program, not only are we holding the startups accountable to what they are looking to accomplish, but we can hold our advisors accountable because we're providing them, with compensation. So those kind of nuances to the program, I think, have really positioned us to be really successful.
I think that's fantastic. And I love what Nex Cubed is doing. I've been looking at a couple of the portfolio companies that you guys have already worked with and committed to. So tell me what you look for in the founders and in the startups to sort of make sure that they're ready for you and that you are ready for them, right?
Yeah, and so we start really early. We're at that pre-seed, seed stage, so we're not looking at a tremendous track record prior to them coming to us. So a lot of what we're investing in, and I know many investors, say that, but we are really placing our bet on the founders, and looking at the team and seeing is this a team that's in place to be able to execute what they're trying to accomplish. So that's really the major component of the evaluation. Of course, we're then looking at markets and the opportunity set and product market fit and all that, good stuff that, all investors will want to take a look at. But at the end of the day, is this somebody who we think is willing to be coached, is coachable? Because our value add, there's a cash component to it, but it really is the advisory kind of technical support that we have. And so for founders that are just coming literally looking for a check and then they want to move on, that's typically not a good fit for us. But for the ones that are like, hey, they can identify, these are the 3 things that I could really use help on. I don't have all the answers and you may not have all the answers, but together we can kind of figure this out. Those end up being the perfect fit for us.
Fantastic. And I know going into the summer, there are a couple of industries that are sort of top of mind for you, healthcare, fintech. Tell us a little bit about sort of what you're envisioning for this next cohort that you're trying to put together.
Yeah, so when we first started, we were industry agnostic, more focused on the underlying technologies. Was the company using artificial intelligence, machine learning, blockchain, AR, VR, et cetera, which was great because it allowed us to get an understanding of how those technologies were disrupting these legacy industries. But the challenge came about in that it was difficult because we are so fully customized to be able to get a really good understanding and go down deep in all of the various sectors, whether it's retail or education or what have you. And so what we decided to do is create what we call centers of excellence around kind of key verticals where we can do a really deep dive, identify the investors in that industry that are focused on that area, corporations that we can partner with to be a part of our program, and then finding subject matter experts in those areas such that when we go to the founder, we can say, not only can we provide you with the more general startup one-on-one founder support, but we know the customers that you're trying to reach. We know the experts in those fields, and we can help get you connected in with them. And so over the last few years, we launched a digital health center of excellence. And then last year we launched a fintech program. And while we have a more kind of specific thesis around what we're trying to do, a lot of it is, we're looking at digitally enabled kind of software-based business. We don't spend as much time on the hardware side unless there's a really strong kind of software kind of data component, to the model. And yeah, we're looking at that stage of typically the companies they've raised some friends and family, some angel funding, and are now looking to kind of raise that first substantive $750 to $1 million type round, and we kind of put them on that path to get there during the 4 months. So that's kind of our sweet spot. There's an MVP, there's some fundraising traction, and now they're really looking to commercialize so that they can raise that larger round of capital.
Fantastic. And I think this whole idea of creating a center of excellence is such a great point. I know a lot of accelerators don't necessarily follow that model, and it's a huge disservice to the founder because now you're showing them how the business is done, but not necessarily showing them specific things about their industry, right?
Mm-hmm.
So I love that approach that you guys are following. As far as the process goes, let's dig in a little bit about what the founders can expect when they first reach out to NextCube.
Yeah, so they, whether it's via our website or we also have an application on F6S that if you search Nex Cubed, you'll find. We'll, take whatever information the startup is able to provide at that point, whether it's an executive summary or a deck. And if we feel like there's an alignment, how our centers of excellence are structured, we've hired managing directors and program managers in each one of the sectors. So they'll review the kind of that initial information, and we don't want to put companies through the ringer if we don't think there's an opportunity there. So once we've done kind of some initial kind of due diligence on the company, we'll invite them for a call where they can kind of share in a little bit more detail what they're building. If we think that there's an opportunity, the company would be a good fit for our program, we'll invite them to do an official, application and apply through the portal. And then what we like to say is that even if the company isn't ultimately successful gaining acceptance into our program, that they'll get a lot of value just in the process, because we'll start doing kind of a due diligence, which a lot for many of the companies haven't received institutional funding yet, so haven't gone through like, what's a data room or what do I need to put in there. And so we kind of put them through that process in a very friendly way. We say, hey, look, if you don't have the information, don't try to create it overnight, but here are the types of things that investors are going to be asking for. And so we think that that process in and of itself is good value for the companies. But assuming that they make it through the process, and then it's about identifying how we can best help them during our 4-month program. We do start kind of in a cohort based model. So for fintech and digital health, the next cohort, we haven't finalized the dates just yet, but would launch in the fall. So now is a great time for founders who are in those sectors to do a little research on Nex Cubed, nex3.com, read a little bit about how, our current portfolio and how we've helped companies. And if it seems like it's a fit, we would, love to hear from them.
Absolutely, and we'll link all of those resources in the description below. So if there are founders that are listening to this and want to get in touch with NextCube or Marlon, you can follow those links. Let's talk a little bit about what kind of team that's actually interacting with these founders. I know Harut is sort of a superstar in your company, but I want to sort of understand that process, that due diligence process, and the team that you have working on that.
Yeah, so I mentioned our managing director and our program manager in each of the verticals. They're really the tip of the spear in terms of identifying those opportunities or those companies that would be a good fit for our accelerator. And so that is the initial interaction that the founders will have, will be with the team. But as they go through the process and we're starting to get an understanding of what their needs are, we will bring in a subject matter expert. So if the company is it's a healthcare company and they're focused on selling into hospitals, or if it's a company that's going to need to go through FDA, the FDA regulation, we'll bring in an expert in that area. So they would be helping to inform and make us get a better understanding of what the needs are, kind of looking 3-6 months ahead and saying, okay, this is where the company needs to be. Here are some of the things that they're going to need to be doing. So they'll interact with those advisors, and oftentimes it's that same advisor who we would then plug in with the company during their 4 months. And that part of the model that I mentioned earlier, where we're compensating our advisors, we really do want the teams to feel like that person is an extension of their team for that 4 months, and that they're rolling up their sleeves and getting work done, whether that's helping them prepare for investor presentations or customer discovery meetings. or just thinking about their ideal customer profile, whatever that is, that person who we assign to the team, they're tasked with helping to make that happen. So we try to make the process as painless as possible on the teams. And like I said, hopefully, even if they're not ultimately successful in gaining acceptance in the program, they got a lot of value out of it.
Absolutely. Yeah. And that's so important so that the founders actually get to know the people that they'll be working with once they're admitted into the program. So
Yeah.
that relationship starts to get built very early on, right?
Well, and we talk about that a lot. Like it's double opt-in, right? Like what you're evaluating us, you being the founder, as much as we're evaluating you. And so throughout that process, you should be, as the founder, thinking about, okay, is this somebody, is this an organization that I want to work with, and are they going to really be able to help me move the needle? Because it's definitely, in order for this to work, both sides of the equation need to be coming to the table saying, yes, this is a really good fit and we can make it happen together. And there are times where we say, look, we don't think that we're in a position to be able to help you. We really like the company, but we don't have the right person or the right opportunity to get you off of the ground. And in the same way, the teams may go through the process and say, you know what, I think I'm a little bit further along than what you guys are able to provide for me, and then they can go their separate ways. And either way, for us, it's better to make that decision earlier than midway through the program. So
absolutely,
we try to provide as much transparency up front as possible.
Absolutely. And time commitment on both sides is very important, and that's precious. So you want to treat that with care. What are the actual 4 months like? What are they? What do the founders get during that time?
Yeah, so I mentioned our advisor, so they'll get that access to that person throughout the program, and they depending on what the needs are of the company, completely kind of customized to address that. We do have like the more horizontal programming, so we'll have different sessions. If it's healthcare, like I said, there may be a regulatory conversation. There could be things related on the legal side that we think is of value to all of the teams, irrespective of their specific needs at that at that point. So there's kind of more of these informational sessions that are sprinkled throughout the program. But yeah, a lot of it, like I said, is more customized. So it could be that they're meeting with potential customers, they're ready to have those conversations. It could be a lot of work behind the scenes getting them to that point. So it all depends on at what stage the company is coming to us. But it's a lot of one-on-one meetings, less structure on kind of the more formal sessions, but we do have those throughout the program. And then kind of the guidepost throughout the program is that there's a kickoff first week where we're bringing all of the teams together, whether that's virtually or in person. We have a midpoint check-in where we're touching base with the teams and doing some more kind of group programming together. And then at the end of the 4 months, there's a demo day where they're pitching to investors and hopefully going out and raising a lot of money.
Fantastic. Yeah. And I've seen those demo days. Those are fantastic. So the interaction is sort of ongoing, and I don't want to say daily, but at least, every few days someone is reaching out to the founders and vice versa, right?
100%. And because it is virtual, and a lot of it is happening over Zoom, we do have those three in-person checkpoints when we're able to get back to doing that, which we imagine we will in the fall. So it's structured around the schedules of the companies, because again, part of what we're trying to do here is move them further along. So we don't want to pull them away from running their business, 100% of the time. So it's that balance of, making sure you're doing the blocking and tackling necessary to grow your business, while at the same time, working with us to help you get, accelerate that progress. And, oftentimes just having somebody who is helping hold you accountable to your goals, because at the beginning, at the kickoff, we're saying, okay, what is it that we're trying to accomplish? And oftentimes we'll say, well, we want to get 10 deals signed this over the next 4 months. We say, great. How many customers do you think you need to talk to get to 10? Right. And then they start thinking, well, if my hit rate is this, I got to talk to 1,000 companies. Like, well, could you really think you can talk to 1,000 companies? And so going through that process with them and just saying, hey, let's create a realistic roadmap on what we can get done over the next 4 months is part and parcel to why we think we've been successful.
Absolutely, and that's so important. Creating that structure and that framework for the founders, because everyone wants that hockey stick, right? But it's a lot of work and a lot of sort of critical thinking to get to that point. So that's fantastic that you go through that process with the founders. Now you're actually investing into these companies. So let's talk about the source of that capital also. We have a bunch of investors that are watching this video. So what is sort of their incentive, and how do you sort of accept that? Let's talk about that structure a little bit.
Yeah, we're a little unique in the sense that we're not a fund. We're not organized as a fund, so there are no management fees and carry that our investors need to worry about or consider. And we raise capital where primarily from high net worth individuals, family offices who want to get exposure to this early stage asset class, but up until this point, they've been maybe doing some angel investing, here and there. They're not writing big enough checks to get into the large, funds. So, and they don't necessarily have the infrastructure to really do this type of investing in a strategic way. And so they'll invest money into Nex Cubed, own a piece of Nex Cubed, and so by extension, a piece of our entire portfolio, investments that we made on day one all the way till today. And so they don't have to worry about whether they're in fund 1, fund 2, fund 3. It's all in one holding. And when there's a liquidity event in the portfolio, we pull that back into the holding company and then distribute the proceeds out pro rata to our shareholders. So there's an opportunity for that ongoing liquidity. There's no kind of 5-10 year lockup, none of that. They can start, seeing some of that money come back to them in the form of a dividend, if you will.
Absolutely. And that structure is so interesting because your portfolio is publicly available. People can see the companies you're invested in. So they already get a sense of what it will be like to invest with you. So that's fantastic. Now, what is sort of the minimum investment, and how are you sort of approaching, what kind of investors you take in? Let's talk about some of those details.
Yeah. And so, on average, our kind of average investment is in that $250K range, but we've accepted investments, smaller than that amount, and we have investors who invest in millions into the company. So there is a wide range. I think more so than the amount is we are building a network and a community, and so there are other ways that people can add value to us beyond the size of their check. We obviously, it's good for them to have some sort of skin in the game and in that way. But if they're telling us, hey, look, I'm willing to serve as an advisor or as a mentor and, put in some sweat, equity, we'll oftentimes take some of those, smaller checks because we think that the person, the individual would be a great add to the overall network. But that kind of community network, aspect is so critical for us because not only from a way to support our portfolio, but many times those are the individuals who are supporting our companies after they leave our program, right? Because they're typically looking for 25, 50K, checks. now they've had a chance to really get to know the company through Nex Cubed. And you mentioned my colleague Harut, who heads up our investor relations, is in contact with all of our investors, keeping them updated on our portfolio. But since currently Nex Cubed, we're not doing any follow-on funding directly into the companies. Oftentimes, it's our investor community who they've now seen the company for 4 months. They went to demo day. They're the ones who are actually helping our companies get funded post graduation. And as a result of this model, we've been able to help our companies have raised over $100 million either during or after our program. So on average, we've done 80 investments. So on an average, our companies are raising about $1 million, which, again, for where they are and what they need, that's a great bridge for them to then go out and raise their first Series A, type round. So, I hope that I rambled.
Yeah, no, that's absolutely, that's fantastic, because investors are looking, once they get to know the company, the CEO, see them for 4 months, they want to build that relationship. And once they have that relationship, they're happy to invest, continue to support that company after they leave Nex Cubed. So that's a fantastic model. As far as investors, what else should we know about the structure and about the process that they go through?
Yeah, I think if you think about it as a index fund ETF type model, where, like you said, it's not a blind pool. You get to see what's in the portfolio, whether you invested day one or today. You're going to gain a piece of all of that, and then everything we're doing into the future. And so that ability to hedge your bets, if you will. If you are looking to start investing in this early class, you get an opportunity to get curated deal flow, over it, almost 80 investments in the portfolio to date. And we're, as we add more cohorts, that number will increase. And then it's, are you looking to do direct deals? And you'll have the opportunity to really pick and choose the ones that you like, that you want to continue to support, and you'll have access to those deals in a way that you wouldn't have if you were just out on the coming in cold. And so our portfolio know that kind of the first folks that they need to answer the door for are friends of the program, and oftentimes we're the ones who are helping to facilitate those interactions. So I would say for the investor that's looking to mitigate their risk and wants to gain exposure to kind of pre-seed, seed stage deals, that this index fund type structure gives them a way to dip their toe in the water and then look for other opportunities to double down.
Absolutely. Fantastic. So now let's go back to the founders a little bit, because I have the final question for you. And I ask all of the investors this last question, because I think it's so important for founders who are listening to this to walk away with an action step. So what is the most important thing that the founders need to have or have done before they reach out to Nex Cubed? That's the the one thing that you look for in that first conversation. If they haven't done it, that's it. The conversation's over right off the bat. So what is that one thing for you?
Yeah, for me, and it could be different for some of my colleagues who are also on the investment committee. But I would say, like, really know your business. Like, understanding your markets, understanding your competition, and not that it's you're saying, hey, we don't have any competition, or we've kind of figured everything out, so you don't need to worry about it. It's being the expert on what you're doing. And I think sometimes that it seems a little almost oversimplified, but we're approaching it saying, yes, we have a pretty good understanding, but we're not living this day to day, and you need to be living it 24/7. And if you are, then you should know more about it than we do. And so when we ask questions, it's not like in a way to play gotcha. It's just more to get an understanding, like, what are you seeing? Because, you're the one who decided that there was a real problem that needed to be solved. So tell us about where you got that intel and data and what's really driving you. So I would put that 1A, and then 1B, if I could add another one, is
Absolutely.
like, what is really driving you to do this?
Mm.
Because this is a really hard journey. As we all know, entrepreneurship isn't easy. So if there's not a personal motivation, again, this is me speaking for me, that there's not a personal motivation that's beyond kind of dollars and cents, I get a little concerned that when times get a little bit tough, folks will just say, I gave it a good effort. But if you have a personal motivation, like whether you're getting involved in, fintech around financial inclusion or healthcare because you had somebody who was impacted by some sort of healthcare, like that just additional motivation, I think, can often help carry people through when times get challenging, which we all know that they will.
Absolutely. No, that's fantastic advice. And both of those points are such great points. Do your homework, get to know the industry that you're in. And second, have that motivation because things are going to get hard. And I agree with you. Things always get hard. And you have to have that stamina and that drive to sort of push through that.
Mm-hmm.
Marlon, thank you so much for coming on today. Such fantastic advice for founders. I love what you're doing with the structure, with investors also. And thank you for sharing that story with us. I really appreciate it.
No, thanks for having me.